I think Americans are a little perplexed when they see news reports of inflation coming down, and yet they don't notice any of their prices coming down.
65% of U.S. adults surveyed by CNBC said inflation is the main driver of their financial stress. Nearly half feel like they're in a worse financial situation than 5 years ago.
It's still shocking to go to the store and have your bill be a lot higher than it used to be.
While inflation is slowing down, prices are still elevated. This includes many goods and services such as food, gas, repair of household items, and car insurance.
Economists suggest that the prices are not going to go back down.
But if inflation keeps going the way it's going, at some point you're going to hit that rubber meets the road point and people aren't going to be able to spend anymore. And only then is the point where you might start to actually see disinflation and then maybe deflation outright after that.
Here's why prices probably won't come back down and what consumers can do about it.
My name is Jen Lukey. I'm a recipe developer and I create content on Instagram, TikTok, and YouTube showing people how to eat well on a budget.
I turned a $50 grocery haul into 20 servings of healthy dinners, yes, in 2024.
Prices are going up across basically every industry right now. Things that are really taking a toll on a lot of people, but if we can save a little bit of money each week on our grocery bill, that's gonna maybe lighten the load a little bit, and I try to prioritize that. But even in my personal life, things have just gotten more expensive. Every aspect of my life has gotten more expensive. I just try to focus on the things that I can control right now and try to get those costs down.
The Consumer Price Index, or CPI, is a broad measure of the cost of goods and services across the economy. It shows how prices have changed year over year.
Food prices will go up and down. This is one of the reasons why the Fed tends to look at what they call core inflation that excludes food and energy prices, because those prices are flexible. But a lot of the things that we do, say housing prices, furniture prices, the long-lasting items that are called durable goods, those prices tend to not go down.
The price of chicken is a good example of prices going up for groceries. Chicken used to be, for me, like $3.99 a pound for the chicken thighs, or even $2.99 a pound, and then for the chicken breasts, more like $4.99, $5.99 a pound. Now chicken thighs are pretty much the price of what chicken breasts used to be, so that's why I like to opt for a chicken thigh. It's a cheaper cut of meat. They're also really flavorful, so I just like cooking with them.
Price growth is not really that complicated. It's a simple equation with the addition of costs and profits. We're looking at these three underlying drivers of price growth. We're looking at the component that comes from the labor costs, the component that comes from the non-labor input costs, and the component that's being driven by the profit.
So if you look very carefully at what sectors the inflation was in, it was a supply side shortage generated by the pandemic. It was the war in Ukraine. It was demand shifts. All of that was the underlying source of the inflation. And therefore, the Fed's response of just raising interest rates wasn't getting at that underlying source, and in some ways made things worse.
And then it just kind of kept feeding on itself, which is another thing that inflation does. Congress and the Fed were pouring in tremendous amounts of stimulus to the economy. It just created a sort of what you would want to call a perfect storm for inflation, those various factors.
"74% of Americans polled in swing states feel that inflation is moving in the wrong direction, even though prices have been rising at a slower rate since a peak in June 2022.
When people are sort of asked almost anything about the economy, they react in a very sort of visceral way that everything is lousy, even though there's a fair bit of evidence that bit by bit things are getting quite a little bit better. The fact that this negativism is so pervasive in the face of evidence is fascinating.
That disconnect may come from how we measure the economy.
Economists will talk about the delta of things, and what the delta means is just the rate of change rather than the absolute value. And what that really means is, like, say you're paying $2 for a gallon of gas, and then it goes up to 250, it's just like, that's a 25% increase. So it's really that rate of that change. 250 may not seem that bad still from a historic perspective of what you're paying for gas, but it's a lot more than what you had been paying just a little while ago. So that's why it feels even tougher.
Some people may struggle with a psychological phenomenon called money illusion.
People with money illusion, they don't take into account the level of inflation in an economy. So they wrongly believe that a dollar today is worth the same amount that it was the year prior. So even if your income is rising each year and you're getting a raise, with inflation, it doesn't feel like you're ever getting ahead because everything is more expensive. So it can feel like you're on this hamster wheel. It's the reason why people get so angry when they go to a coffee shop that, a cup of coffee used to cost $4, now costs $10, and it leads to so much frustration and anger and disappointment, almost like you're being robbed or ripped off.
We went through such a long period where we didn't have any serious inflation, and now just getting used to this rate of change where things are 20, 25%, in some cases higher than they were before, it makes it feel maybe a lot worse than it would if you just sort of looked at absolute dollar value of things.
Food is one of the most volatile goods the government tracks. Grocery prices shot up after the pandemic, which led to sticker shock for many people.
Probably the best example would be eggs. Eggs were always my staple where it's like, I'm only gonna spend $2 on a carton of eggs, and that's gonna be a great protein for the week. And I remember going into the store in 2021 and 2022, seeing it be $5 and then $7. You go to the grocery store now and some of the cartons of eggs are $11.99.
The fluctuating price of eggs wasn't just a pandemic side effect. The increase in price at the end of 2022 and into 2023 was largely due to an outbreak of a highly contagious bird virus, which contributed to an egg shortage. The price began to drop in February 2023, only to rise again when the avian flu resurfaced at the end of that year, just in time for increased holiday demand for eggs.
People are every day experiencing these price increases and seeing them across all aspects of their life, and people are struggling because of it.
Meanwhile, some companies are keeping their sales prices high as the cost of production falls. The Producer Price Index, or PPI for short, measures the change over time in how much businesses pay for the products they sell. When compared to the Consumer Price Index, which is how much consumers pay for products, there's a disconnect. CPI has been consistently rising. PPI has been trending downward since peaking in June 2022.
The big driver of price growth over the last few quarters has actually been the profit piece of the equation. Companies actually kind of juicing the markup, what they charge over and above their underlying costs. When consumers absolutely have to purchase an item, when it's a must-have, not a nice-to-have, companies have a bit more pricing power. Companies also have more pricing power when they have a lot of market share. One of the things that you see if you look at the earnings calls for the two big diaper duopolies, Kimberly-Clark and Procter & Gamble, who basically own 70+% of the diaper market. What you see is while diaper prices have stayed high, one of the key ingredients in diapers, that wood pulp, which is the sort of absorbent material that helps diapers function, the costs of that have come down considerably over the course of the last couple of years. And yet, consumers like me aren't seeing savings on diapers.
Another disconnect between the messaging and the experience is the statistics around wage growth. The gap between wage growth and inflation is narrowing. Since May 2023, wages have been increasing faster than inflation has been rising. An analysis from Bankrate suggests wages may eventually catch up with inflation. The report estimates the gap could fully close around the fourth quarter of 2024. Most Americans can expect an annual pay bump of around 4% in 2024, which won't be enough to cover higher costs.
I think, for many Americans, wage growth is very overdue. They've gone years, if not decades in some cases, with stagnant wages or small raises. There are indications that there's more room for wages to increase and more room for wage growth. The corporate share of national income, is rising, and the labor share is not rising as quickly.
We've just been shown over time that prices rarely will go down. They will go up a lot easier than they will go down.
There's a key difference between inflation increasing more slowly, which economists call disinflation, and inflation reversing itself, which could lead to prices coming down, a phenomenon called deflation.
Disinflation is good because disinflation means that the economy is still growing, but the rate of price increases is coming down, and hopefully you're finding some sort of stasis in the economy. Deflation is just generally associated with not just recessions, but deep recessions in the economy, historically speaking. Deflation means that prices are actually coming down, and the reason why prices are coming down is because people aren't spending money.
Americans are still spending money. Retail sales were up 2.1% year over year in the first quarter of 2024, and consumer spending jumped in February and March. Despite this, experts have raised concerns about possible, quote, pockets of trouble, as total credit card balances in the U.S. spiked to a record high of $1.08 trillion in the third quarter of 2023. Nearly half of Americans with credit cards say they are carrying a balance from month to month, according to a November 2023 survey by Bankrate.
Most economists who I speak to now still believe that we are on a disinflationary path, that inflation is heading on its way down. I think absent any type of major shock event, the inflation is kind of where it's going to be for a while, and there's not a lot of outlook that inflation is going to spike from here, but it is going to take some patience as we watch that rate come down.
I encourage people to shop where it's convenient for them, but don't be afraid to go to multiple stores if it works for your schedule. Seek out a more budget-friendly store. My number one tip for saving money on your groceries is have a plan. I think the worst thing that you can do when you're trying to save money on your grocery bill is to show up at the grocery store and have no idea what you're going to be buying and what you're going to be eating that week.
One of the great adages about inflation is the best cure for high prices is high prices. The meaning of that is that at some point there will be an equilibrium. Prices will reach what economists call the point of diminishing returns, when they will no longer be able to have that pricing power and they'll have to pull it back. Companies have not hit that point yet.